A gentle reminder to all our delegates, if you wish to know more about our speakers, please check out the speaker's profile page on the official website. If you are following us virtually, please post all your questions below the live broadcast window. As for our Thai participants, please go to slido.com, enter the event code, #GRC 2020 to post all the questions. Our moderators and panel speakers will attend to them during the forum segment. And also, don't forget to also visit our virtual exhibition. The Global Rubber Conference 2020 is partially sponsored by the Roos Plants, the Industrial Estate Authority of Thailand, and Spear Corporation Sendirian Berhad. And now, introducing our Session 1 speakers and moderator. Over to you, Professor.
Thank you, Bunny. Very good morning to everyone, to distinguished guests, to our friends, to our colleagues down there in Thailand, Swadikap, as well as Indonesia, Sri Lanka, Cambodia, Vietnam, China, and everywhere else in the world. Guys, we have a very difficult task today, and that is to find some insights and some guidelines or some inspiration. What do we do next under this difficult situation? I'm sure all of you have realized from the early morning talk, this is the uncharted or unprecedented era for all of us in the world, facing, including our national rubber. And the pandemic has caused a terrible shock and has changed the structure of the industry, both supply and demand worldwide. And this is a very difficult feat to face. Right. And thank you very much for appointing me to be the moderator for this difficult session, but I will try my best. And you guys are lucky because you have 3 distinguished speakers to give you some ideas or some inspiration. What will be your move in the next year at least? All right. So the theme of the session is Global Rubber Outlook, Demand, Supply, and Price Forecast for 2020 and 21. We are having new norms, but I myself not very sure what are the norms besides the normal SOP, medical SOP. But as for the industry, I'm not very sure what they are. Maybe our speakers can highlight, right? So we have 3 distinguished speakers. We are lucky indeed to have them again. These are very experienced speakers, and they are Mr. R.B. Premadasa, Mr. Salvatore Pinizotto, as well as Mr. Dawong. I think the Secretariat has intelligently organized the theme in such a way that major fundamentals as well as technical aspect of a market is considered. So we may start in a few minutes' time, but I would like to remind to speakers, please restrict your presentation to about 20 to about 25 minutes, yeah, because we only have one hour, 15 minutes. And we want the participants to post their questions so that you guys can provide some answers. All right, let's go to paper number 1. This is big topic. Outlook on global demand and supply for natural rubber. Yeah, so the perspective or the boundary is global, and this is a very difficult task. And we are very happy to have Mr. Premadasa. I don't need to introduce very detailed, but please note that currently he is the SecGen or Secretary General of the Association of Natural Rubber Producing Countries. And he was before the DG or Director General of the Sri Lanka's Rubber Development Department. So I believe he has the tools, he has the insight, he has the experience to talk to us, to tell us what would be the outlook of demand and supply for rubber and hence the price. Mr. Premadasa is all yours now.
Okay, thank you. Good morning all to you. Can you hear me? Can you hear
Yes, I
me?
do.
Okay,
Yes,
right.
I do here.
Okay, right. Good morning. First of all, I would like to thank Professor Fatima for her kind introduction regarding me, and especially also we want to thank the organizing committee, ComFEXUP, giving me this opportunity to speak to you. Once again, thanks both of them. Today, I am going to talk about outlook on global supply and demand for natural rubber for giving more attention to the 2020 and 2021 under the prevailing COVID-19 scenario. Can you go to the next slide, please? Yes. Now, based on this topic, I will try to draw your attention to the following points. How does COVID-19 influence to the world rubber production and basic features of the impact? And views on the current scenario of upstream sector and the constraint factors relevant to the natural rubber production, global supply and demand beyond 2020. And finally, I want to conclude and give some policy suggestions. Next slide, please. Yes. Uh, in the first half of the year 2020, rubber industry downstream sector was severely affected by the pandemic. So many manufacturing units in major rubber producing countries such as China, India, Japan, USA, EU countries were closed down because of the lockdowns and movement control orders. Consequently, the raw rubber demand at once collapsed. There was no demand for natural rubber, and high volume of processed NR was accumulated in the midstream sector. As a result of this, latest processing factories and block rubber processing factories were compelled to stop buying raw rubber from farmers. Farmers were unable to sell their products owing to the no demand. Finally, farmers have discontinued harvesting. Without having proper income, the smallholders neglected their holdings. No use of good agricultural practices, no manuring, no weeding and maintenance. At the beginning of 2020, all the governments which were affected by the pandemic have taken various actions such as lockdown, mobility restrictions, and social distances to curb the pandemic. This was mainly disrupted to the harvesting, processing, trading, and transportation activities in the rubber industry. It means the whole supply chain affected by this pandemic. Please go to the next slide, please. Yeah. In the plantation sector, there have been severe shortage of skilled and unskilled labor in the major rubber producing countries. So to some extent, this problem have been overcome by using foreign labor, such as migrant laborers who work in the rubber producing countries became jobless due to the lockdowns and other precautions taken by the governments related to the pandemic. Without having proper income, they were compelled to return to their home in countries under some relief measures. Now some government are taking lot of relief measures. They can resume their work, but they can't come back to work due to the cross-border travel restriction. This factor severely affected to the Malaysia and Thailand. Next slide, please. Next one, please. Yes. When we consider about the natural rubber sector, the impact of pandemic can be differentiated between before the outbreak of COVID-19 and after the outbreak in 2020. At the end of 2019, we assume world natural rubber production will be increased at 2.7% annual basis to 14.18 million tons in 2020. But after the outbreak, forecasted production is 12.76 million tons, and it seems 6.8 decrease when we compare with the previous year production. The impact is 1.06 million tons lost due to the pandemic. If we consider about the other factors experiencing in the rubber producing countries at the moment, such as bad weather conditions, unrest of the civil society, and price fluctuation and decline trend, the world rubber production will further decline in higher ratio in 2020. Number of tapping days and the total harvested area is directly affected to the natural rubber production and also average yield per hectare. Based on the forecasted annual production at the end of 2019, it was assumed YPH will be 1,227 kg per hectare per annum in 2020. But after the outbreak, Now it is assumed that 1077 kg per hectare per annum in this year, 150 grams lost per hectare due to the pandemic. Earlier, it was estimated that world consumption of natural rubber will be 13.82 million tons, and comparing to the previous year, it was 1.2% annual growth in 2020. But after the outbreak, it has gone backwards as 12.76 million tons and reversed to 7.3% decline in 2020 compared to the previous year. Lockdowns and movement control order directly affected to the downstream sector, and they curtailed their large-scale buying of raw rubber. This is impact of the pandemic for the lower natural rubber consumption. Next slide, please. Yeah. This slide shows that how to change the world rubber production and comparison in quarterly basis in 2020. In the first quarter, production decreased by 2% when we compare to the same period in the previous year, and consumption also changed minus 14.4% at the same way. The second quarter, pandemic severely affected to the upstream sector, especially in the small audience sector, and production declined by 15.1%. Compared to the same period in the previous year. The consumption also changed the same way, declined by 13.9%. In the third quarter, the change was very small, but was in the negative direction for the both production and the consumption. However, in annual basis, world production shrinkage to 12.9 million tons and consumption declined to 12.7 million tons in 2020. We assume like that way. It is assumed that 6.8% reduction in the world production and 7.3% decline in the world consumption when we compare with the previous year situation. Can you go to the next slide, please? Next slide, please. Hello. Yes. Here we describe the growth in production and consumption across the countries in 2020 comparing to the previous year. In the production side, in Malaysia, China and Indonesia, their production declined by beyond 12%. Thailand and Indonesia production will be decreased respectively by 7.7% and 4.8%. In addition to the pandemic, current outbreak of the leaf disease and bad weather condition also negatively impacted to the NR production. In the same way, the consumption side also, India is mainly affected by the COVID-19 due to the long period of lockdown. Manufacturing units in India have closed down or curtailed their production. Consequently, the rubber consumption have also gone down. USA and China also shows the same picture regarding the consumption side. Next slide, please. Yeah, next one, please. Yeah. This is the constraints in the production sector. As all of we are aware, so many factors have affected to the natural rubber production after the end of 2019. Mainly market uncertainty and recurrent phases of the low rubber prices. The smallholder income received from the land is not sufficient to cover at least their day-to-day living costs. It created negative mindset in the small audience sector and compelled to farmers to avoid tapping, maintenance of land, manuring and application of good agricultural practices. Not only that, farmers neglected their rubber lands without having covered its cost of production. Resourceful smallholders lost their confidence with rubber and they are reluctant to go for tapping. So great extent of uneconomical mature area is available in the small audience sector in the rubber producing countries. From the beginning of this year, climate uncertainty such as typhoons, unseasonal heavy rains, and floods has extremely impacted to the harvesting and yield. Various incidents have been reported in Thailand, Vietnam, Cambodia, and India in 2020. In Indonesia, Thailand, and Sri Lanka, nearly 600,000 hectares of mature area affected by the outbreak of the new fungal leaf disease. Over the past 2 years, farmers are unable to control this outbreak due to the high cost of chemicals and spraying difficulties in mature areas. This leaf disease highly impacted to the rubber yield. Next slide, please. Yeah. The prolonged low rubber prices keep the farmers away from tapping. The current scenario is that the considerable amount of untapped mature area is able to seen in the rubber growing countries. Low income, high cost of production, labor shortage, poor maintenance, and overage of the uneconomical rubber land due to the low replanting are the main attributes of the planting sector in the rubber producing countries. Out of the total mature area, untapped area nearly comes to 45% in Malaysia, 30% in India, 13% in Indonesia, 7% in China, 3% in Cambodia. Some of the rubber farmers convert their rubber ant into the alternative crop. In Thailand, 433,000 hectares of rubber area discarded during the 2014 to 2019. It seems that over the last few years, planting rate is very low in the natural rubber producing countries. Next slide, please. Yeah. Researchers have already developed high yielding clones having potential over the yield over the 3,000 per kg per hectare per annum in rubber producing countries. But the realization of the yield in the small loading sector is too far away comparing to the research findings. It means there is huge technology gap between the lab and the field. The average yield is very low in the plantation sector in the rubber growing countries. It was only 1,191 kg hectare, per hectare in NRPC region in 2019. Next slide, please. Yeah. As I explained in my previous slide, there is substantial amount of untapped area in the rubber growing countries due to the available in the rubber growing countries due to the various reasons. Although in the recent years, planters have established high yielding clones in their clearings, but the actual yield per hectare is very low without having tapped all the trees in their farms. It means there is unutilized production capacity in the rubber growing regions. So natural rubber production can be increased utilizing the full capacity of existing rubber lands. Another main constraint faced by the farmers is supply chain inefficiency. They do not use modern technology, no proper market information. Poor supply chain create low farm gate price. It finally affects the quality of the raw rubber produced by farmers. At the end of this situation, all these factors affected to the farmer income and purchasing power also. It is severely impacted to the purchasing power also. Next slide, please. Yeah. In here, I take quick look at the impact fall in the average yield. In 2012, in the entire NRPC region, calculated average yield was 1,292 kg per hectare. It was 1,191 kg per hectare in 2019. The average yield declined by 101 kg per hectare in the same time period. Current extent of mature area in NRP countries is 10.2 million hectares. So the corresponding loss in the production comes to 1.03 million tons. Anticipated average yield in 2020 is further low at 1,777 kg per hectare. This is 215 kg lower compared to the 2012. Based on the decline in yield between 2012 and 2020, the loss in annual production in 2020 alone comes to 2.2 million tons. At the price of 1.5 kg, the quantity of 2.2 million tons of NR values 3.3 billion US dollar. The rubber farming country in the NRPC region lost $3.3 billion in 2020 alone just because of the fall in average yield from 2012 onwards. Next slide, please. Yeah. In 2012, the average yield was 1,292 kg per hectare. The NR price was US dollar 3.13 per kg. It means the average annual income per hectare was US dollar 4,044 in 2012. In 2020, anticipated average yield is 1,077 kg per hectare. The price is now about nearly US dollar 1.27 per kg. This gross income US dollar, the gross income the US dollar 1,367 by 2020. Farm average income has declined gradually year by year. If we consider about the cost of production and decline in holding size, the household income is more severe what it is here. Next slide, please. Yeah, global supply and demand beyond 2020. Next slide, please. Yeah. The total area occupied by the mature trees in NRPC member countries is expected to stagnate by 2023 or 2024. The period after 2024, it is expected to witness a marginal shrinkage in the mature area. This is shown in the chart. In 2013, declined area reached to the mature level in 2020. In the same way, planted area after 2013 will come to the mature state after completing 7 years. After 2012, annual planted area has gone down gradually. Next slide, please. Yeah. The trees reaching to the maturity until 2027 are already planted. It means the anticipated figures are realistic. Expansion of the mature area in NRPC region is expected to sharply come down after 2023 because of the low planting 7 years ago. It is obvious that continuous declines in mature area is expected beginning from the 2025. The mature area from 2028 onwards depend on how much will planted from 2021 onwards. Next slide, please. Yeah, there are these are the salient points on the future global NR production. Onwards, 2020, mature rubber area is expanded in marginal level until 2023, and after that, it will stagnate. I brought it to your notice in previous slide also, but if rubber prices is attractive, farmers can improve land productivity in short run, applying the good agricultural practices and something about that increase in tapping intensity also. But the possibility of increased production in large scale is impossible due to the declining of the mature area. If global rubber consumption increase at a nominal rate, the natural rubber supply is expected to move on negative way. According to the supply-demand fundamentals, the market will be favored for the farmers after 2025. Next slide, please. Yeah. Shortage of raw rubber finally creates high price. This will happen after 2025. In that case, farmers again increase planting rubber in their lands. If it is happened, we can assume another planting boom after 2026. It means large extent of rubber trees planted after 2020 come to the maturity level from 2033 onwards. The ultimate result is again there will be excess rubber supply in the market after 2033. Anyway, the shortage of raw rubber is expected to in between 2025 and 2032. Next slide, please. Yes. The consequential shortage of the rubber in the market, the downstream sector minimize the use of natural rubber and go for alternative uses. Without sacrificing the quality of products, the manufacturers increase the use of synthetic rubber and reclaimed rubber for their end product. At the same time, researchers in the manufacturing sector draw their attention to find out the source of the natural rubber such as guaiac and Russian dandelion. This will create, another aspect is this will create good space to increase the synthetic rubber production also. Next slide, please. Next slide, please. Yeah. Outlook on the global consumption. As I mentioned at the beginning of my presentation, the world consumption fell 14.4% in the first quarter of 2020. Again, in the second quarter, it has repeated as 13.9% decrease when we compare with the same period in 2019. But in the third quarter, it seems in marginal decrease by 0.6% in the market. The fourth quarter consumption in 2020 is almost the same as in Q4 2019. Following the lifting of lockdown and strong support policies at the moment, they are creating a prevailing high demand for natural rubber will be disappeared because of following the lifting this lockdown and strong support policies. And so world consumption will recover at the normal stage and continue at normal rate in the future. Go for the next slide, please. Yes. When we projected the consumption in 2021, we need to wait till getting the clear picture of the pandemic and the vaccine's mass availability. Although the consumption fell down abnormally in the first 2 quarters in 2020, it is expected to high demand for natural rubber in the first and second quarters in 2021. It is dependent on the non-fundamentals of the market, such as world economic growth rate, fuel market, trade dispute, and geopolitics, etc. Next slide, please. Yeah. Next slide, please. Yes. In my conclusion, I would like to highlight the following point for the policymakers' attention. Historical planting data indicate the possibility of shortage of natural rubber in the market after 2025. If the world rubber consumption increase in nominal rate, the shortage of NR creates high price based on the market fundamentals. It will appear nearly 10 years. When price goes up, the rubber area will expand again because of high rate of planting. Again, oversupply can be seen after maturity of the new planted area, which is planted after 2025. Consequence of NR surplus in the market, price will again decrease as prevailed in the present time. So it is necessary to maintain proper planting policy to keep up the supply-demand balance in the market. As rubber being a long-term crop, the planting policy should be formulated by adapting the nearly 20-30 year plan horizon. This is my final conclusion. Thank you very much.
Thank you, Mr. Premadasa, for a very concise, sharp, and insightful of the fundamental situation of our current rubber and provide the outlook. In one word, I would like to describe what's coming is a gloom.
Yes.
It's a gloom scenario, right? And the major driver is the COVID, the pandemic situation or phenomena. But what I would like to share with audience is that what this pandemic does to our rubber industry is to open up the Pandora box. We have all these years the fear that we had for our industry, heavy dependence on foreign labor. We were worried, right? And then continuous low income, continuous aging of farmers. And this crisis has opened up all this problem to our eyes, open up all to all of us to see. Now the pandemic has shown to us, because we depend on our foreign labor, once they went home, we are stuck with labor shortage, right? And the farmers all this while receive low income, and look what happened to them. They don't have capital, they don't have enough income to tap, plus the condition imposed upon by COVID. And then we were worried that replanting is low. Now it gets worsened. The percentage of overmature area has increased, right? And then we are worried about inequitable distribution of profit along the supply chain. Now it's getting worse, right? When the tire sector, when the traveling sector is shrinking, the farmers are the one who paid most, right? So with this gloom picture, we would like to hear what Mr. Salvatore has to say. I read his abstract, and he has some ideas of some potential or some prospect that we can tap from this gloom market. Yeah. So Mr. Salvatore's title is Global Rubber Market Trend Analysis, Prospects, and Challenges. So he has two aspects there, challenges as well as prospect. Let me read a bit of Salvatore's background, even though all of you are familiar with him. He is the IRSG SecGen since January 2017. He had a very vast experience in metals and non-ferrous metal industry. That is good enough for him to understand rubber industry. And he has very international experience in terms of market research as well as environmental and economic aspect of industry. So he's the right person to discuss with us today on the challenges as well as prospect for rubber industry under a gloom trajectory posed by Mr. Premadasa. Over to you, Salvatore.
Okay, thank you, Professor Fatima. And I would like, first of all, to say hello to everyone that is in Thailand and also the ones that are connected around the world online. And let me also thank all the organizers for inviting ISG in giving this presentation on this online conference. Next slide, please. First of all, I'd like to briefly introduce ISG for those that don't know the organization. ISG is a long-standing intergovernmental organization based in Singapore since 2008. We are an authoritative source of statistical data analysis for all aspects of the rubber industry, but also we act as a forum for discussion of matters affecting the supply and demand for natural as well as synthetic rubber. Next slide. What distinguishes ISG from other organizations is that all the rubber stakeholders, governments, producers, processors, traders, financial institutions, R&D organizations are represented in it. And this is why we love to say that ISG is truly the only global platform for the rubber economy. Next slide. And more than 100 companies are industry members of ISG, covering the whole natural and synthetic rubber value chain. Next slide. And of course, we publish our statistics, and we have various publications on a monthly and quarterly basis that are accessible through membership. Next slide. So what I'm going to present today, first of all, is I will point out that rubber is a strategic raw material, and we have to understand how important is rubber for the world economy and the role that it plays. I will give a few information about the social and economic importance of natural rubber. And then we are going to give the ESG views of the recent market trends and short-term forecast. And of course, at the end, what are the challenges, but also the opportunities in there for our sector. Next one. Yeah. Okay. So if we look at the world's supply of rubber, now we can say very clearly that 40% of the world supply is related to natural rubber and 53% is related to synthetic rubber. Then if we speak about natural rubber, the production is very much concentrated because already Thailand and Indonesia, that are the two main producing countries, represent 62% of global natural rubber production. Situation is slightly different in synthetic rubber, where China and the USA represent 42% of global synthetic rubber production. A great part of rubber, 58%, goes to tire production, and 42% are currently going to general rubber goods, which includes, of course, production of gloves, for instance, that very recently, due to the pandemic, has risen in terms of production itself. Next. So just to give you a few numbers about the natural rubber economy, above 13 million hectares are covered by rubber trees worldwide. We have seen also from Mr. Premadasa's presentation that the world production of natural rubber is about 14 million tons, 13.6. It's important to point out that 90% of this production comes from small farmers, and the average yield, as shown before, is 1.2 tons per hectare. Next. This graph, I think you are very familiar with it because it shows the trend of rubber prices, both natural rubber and synthetic rubber and butadiene in the last 10 years. Unfortunately, after the peak reached in 2011, the trend was downwards. We had a small peak in February 2017 again, but after that, the price tended to still going downwards till October this year, so months ago, where we have seen prices for natural rubber and synthetic rubber going up again. In this recent dynamics, I think the natural rubber price has had a faster pace compared with synthetic rubber and butadiene prices. Next. So, of course, this 2019, end of 2019, we had the explosion of the COVID-19 pandemic that has influenced the world economy during all this year and still influence it. Next slide. The coronavirus pandemic, which was first detected in China, has infected people so far in 188 countries. Many people have lost their jobs or seen their incomes cuts. Unemployment rates is on the increase across major economies. The demand for oil dried up as the lockdowns across the world kept people inside. And the crude oil price had already been affected by a row between OPEC, the group of oil producers, and Russia. Coronavirus drove the price down further. And also on the retailing side, we have seen unprecedented lows as shoppers stayed at home in a bid to stop the spread of COVID-19. All this situation has brought the world economy into a recession. Next slide. This is the forecast, the latest forecast of the IMF that is predicting a contraction of 4.4% in its base case. The IMF also has a downside case and an upside case. So the downside case will see a decline of 5.15% in 2020. And a smaller increase in 2021, 2.2%, while in the base case, the increase in 2021 is forecasted to be 5.2%. Now, what are the major risks here? That first of all, the COVID-19 pandemic second wave and lockdowns, especially in relation to Europe right now and the USA, where the situation is really critical at the moment. Most European countries are adopting what they call the light lockdown. So it means not closing everything with still manufacturing activities. Most of manufacturing activities is still going on, but this, of course, might change if the situation might get worse in the coming days. And the other issue, of course, is the post-US presidential election. It seems we have a new president, but still not clear if it will go this way, as there are a lot of disputes that might go for a longer period of time. But certainly what we can say is that collectively actions by governments around the world have prevented the recurrence of the 2009 global financial crisis. Of course, these are difficult times, yet there are some reasons to be hopeful. Testing has been ramped up, treatments are improving. There are also good news in terms of the availability of vaccines starting from the first quarter 2021. So I think there are some good news that we can consider in here, but the situation is very much in evolution and might change very quickly. Next. So if we look at the GDP growth by areas or major countries, now we can see that only China that has exit from the coronavirus pandemic first of the other countries, and till now we have seen they have not recorded any major cases in the country. Manufacturing activity is running up. So China is the only country in 2020 that will record a positive GDP growth. You can see USA is down 4.3% according to these statistics. India minus 10%. The European Union is minus 3.3%. I think everyone is down except China. That, as far as natural rubber consumption is concerned, is relatively good news, because China represents the greatest part of natural rubber consumption in the world. Next. If we look at short-term indices like the Purchasing Managers Index, we can see that the industrial production since June of this year has slightly recovered in the major economic areas, including the USA, Europe, and of course China. This was the situation immediately after the stop of the lockdown. In every country, manufacturing activity restarted again, and this is clearly seen in the statistics and in the trends of this curve. As I said, the situation is very in development, so this picture might change very quickly. Next. This is the world natural rubber production trend. You can see has Thailand, Indonesia, and Malaysia that are represented in this brownish part of the bars, are still representing great part of the production, although in 2019 their production share went slightly down. But we can see increase in productions, in other rubber productions in the Mekong region and Africa, in particular in Côte d'Ivoire, that they have partially offset the decline in ITRC countries. Next slide. Of this, Mr. Primadasa has already spoken. I think 20% increase in total rubber area was driven by non-traditional regions. Area expansion under more than 3 million hectares up in the last decade, and a substantially lower total planting happened in the last 2-3 years. So lower prices have certainly influenced small farmers' decision on reinvesting in rubber, leading to decline in replanting during 2016-19. and will result in a lower than required rate of replanting, especially from 2020 onwards. Also, there are risks associated with capital financing to small farmers that could limit acceleration in the rate of replanting expected. As far as new planting is concerned, we don't see very much an increase up to 2028. Next. Natural latex consumption is mainly dominated by glove sectors. 7% global glove demand is concentrated in the US, Europe, and Japan. The COVID-19 pandemic has significantly increased the current gloves demands per capita. And also, we have to say that high market demand for nitrile latex has been pretty interesting, and capacities there are also restricted. Next. If we look at synthetic rubber, as I said previously, China and USA are representing 42% of global synthetic rubber capacities. Some of those capacities in the past have been not completely went forward. There has been some slowdown, but no, this gives you a good understanding of where the production is in the synthetic rubber. On the synthetic rubber side, third producing countries and third and fourth are South Korea and Russia, and also Japan is a relevant producer there. Next. This is the trend in production in synthetic rubber. The total synthetic rubber production in 2019 has been about 15 million tons. Next. As for natural rubber, great part of the consumption of synthetic rubber is in Asia. More than 52% indeed, and of course also here a relevant part is played by far by China. Next. So we said that majority of rubber goes in the automotive industry. The automotive industry is a globally interconnected industry with a large economic footprint. During 2020, there has been a major contraction in production and sales of especially passenger cars. China became the first major market to recover. The overall sector is rapidly moving towards emission-free mobility by making the transition to electrification. And automakers are increasingly leveraging disruptive technologies such as artificial intelligence, deep neural networks, big data technologies, among others, for autonomous vehicles. So the industry, the automotive industry, is changing completely their phase, moving towards electrification, digitalization, and a different scheme in terms of mobility. And this will have an impact also in the rubber sector and the rubber consumption in the future. Next. We have spoken about the recovery of China. This graph is just to show you the extent of the recovery in the vehicle sector that happened there. In 2019, China passenger car sales was 22.2 million, down by 8.9%. And in the period of January-September, it was down 12.3%. And what has bringing up the Chinese sector, vehicle sector, has been the commercial vehicle sales that actually increased of 20%, with flourishing heavy truck sales. Next. So if we look at the global tire industry, miles driven were lost to the lockdown measures and slowdown in economic activities that will translate in loss in replacement tire sales. Global tire sales is expecting to contract 13.6% in 2020. There has been a better growth in the non-tire sector, especially driven by demand growth in the healthcare sector. Next. So here it comes, what is our estimate in terms of preliminary estimates in terms of what is going to happen in 2020 for natural rubber demand, synthetic rubber demand, and natural rubber production. The natural rubber production demand in our view will decline by 10%. The natural rubber production will decline by 5%. This is because some of the production lost in some countries have been recovered in other countries, and the synthetic rubber demand is likely to go down by 11%. The decline in synthetic rubber is expected to be stronger than in natural rubber consumption because of the drop in personal travel via passenger cars during the pandemic, as more synthetic rubber is used in the passenger cars tires. The synthetic rubber demand is expected to come back to pre-crisis level in 2023. Although, as we said, the synthetic rubber consumption in China recovered quickly due to the strong rebound in passenger car sales. In Europe, passenger car sales recovered in summer. In the US and Japan, passenger car sales plummeted in Q2 and Q3. Next. So we have spoken so far of a short-term risk that has been and is the pandemic. I wanted to say here that actually risks are not linked to the pandemic, but as also briefly mentioned by Mr. Prabhadasa, climate change might pose several risks to natural rubber systems, but also several opportunities. Next. I want to say that underline the fact that natural rubber sustains 40 million people with their families around the globe, with supply chain generating more than $300 billion US. Climate change is clearly making the weather more extreme. So we have super powerful storms that have become more common, and there are more days of heavy rainfall or extreme heat. So it's not only rain, it's also the fact that in some regions are becoming drier. So the deteriorating conditions are locked in for some time because whatever we do today in terms of climate change, it will have effect in the very long term. So I think we have to cope with climate change risks for a long period of time. So global production, global natural rubber production can be safeguarded and sustainably increased on a lasting basis by strengthening climate resilience and successfully contribute to climate mitigation goals. If someone came out during the workshop that ISG and C4 and CIRAD and the International Rubber Research and Development Board workshop on climate change and natural rubber systems outlined was that natural rubber systems can play a very important role in the mitigation of climate change risk, but also we need to make sure that natural rubber plantations can adapt to the new climate situation. So we have to make sure that we put in place all the actions needed to make this happen. Of course, there is a problem in terms of funds and finance. Funds, we learned very recently, are widely available. It is up to us to make sure that these funds will be challenged in the natural rubber sector. Next. So certainly, if we have key takeaways, rubber consumption is declining this year, driven by demand shock in the face of the pandemic contagion, while natural rubber production intensity is also declining. Demand recovery next year could be lower than expected, despite solid growth in emerging markets on the second wave of the pandemic spread. And concerns are on a massive rollout of vaccine developed. Vehicle and tire sales has impacted the global growth in short term, while sharp growth in non-tire sector is expected in near term, driven by rubber demand from glove sector in the new normal. As I said, mobility and digitalization will drive innovation and growth in the rubber industry. Next. So main concerns and opportunities. I think we have to, apart from the pandemic, of course, the COVID-19 pandemic, but what is concerning me is the sustained low price that has been there for many years. I think there are reasons for that goes beyond the short-term risks that we mention, and as a sector we have to make any effort to address it. Also because the COVID-19 has made things worse, as Professor Fatima was mentioned before. Small order incomes was low, and is going even further lower, because in this pandemic, the discrepancies between rich and poor has became wider and wider. So, so I think we need to have extra care attention on smallholder incomes, and with this movement of farmers going out from the rubber industries, that is very, very dangerous for the stability and sustainability of the overall industry. We need to put attention to any financial support to small farmers in replanting. The replanting is not free of charge. It costs, as an high cost. As I said, there are funds available. We need to be able to use those funds properly. We need to put attention on climate change, as said, very important. We cannot forget about this. We are going to, otherwise we are going to assist the reduction in production due to the effect of storms on producing areas from time to time, and that will be more and more frequent. We need to add value to natural rubber. Now, in many countries, we still sell only raw material natural rubber. We need to be sure that more countries add value to their own production, that it means moving more downstream, investing in industries, putting in place the right framework and the right fiscal policies to make this happen. Also because China, in terms of tire production, might move in the future in a different direction than where they are right now. So I think more countries need to increase their own internal demand, but this will require policies from governments that actually help this transition. And a final look has to be given to raw material efficiencies, recycling, circular economy, and lower CO2 emission. I think this is all from my side. So I would like to thank you, everyone, for your patience. And now if there is any questions, I would be happy to answer. Thank you so much.
Thank you, Salvatore. You have done our job, but you have helped us with our job by listing the recommendations. Very good recommendations, and thank you so much for Salvatore for listing the challenges, and the prospects. And Salvatore said that the prospects are there, particularly the non-tire sector and new producers in the African country, Cote d'Ivoire, as well as South America, and China is showing some recovery. And Salvatore is optimistic that COVID-19 will be addressed in the years to come once the vaccines are cleared and so on. So that is from Salvatore. But of course, lurking are the challenges, Challenges are many there from the transformation of the automobile industry, the climate change, and the smallholders becoming poorer. There is no structural change there, right? And all these institutional factors. Okay, thank you so much, Salvatore. And please refer to his suggestion in the last slide, which deserve further consideration as well as analysis. Right, we move on to the next one, which is quite a exciting topic for those who are interested in futures. And this time around, we have Mr. Da Wong, D-A-R Wong. He is the Chief Investment Officer, ALA Advisors Private Limited. I heard he's quite a well-known personality. Just to give you a brief background of Mr. Da Wong, is a professional fund management industry with 30 years experience, but he looks young here, 30 years experience in the global financial markets. Are you a quant as well, Da Wong? Involving in structured portfolio financing, fundraising exercise, and M&A or merger acquisition. And currently he's expanding into blockchain technology. So he's quite a guy. So what Da Wong going to present today is what you guys want to hear, and that is financial and technical perspective. Rubber prices outlook, 2020 to 2021. Financial and technical perspective. Hopefully he can give us some tips at the end of his presentation. Over to you, Da Wong.
A very good afternoon to everyone, ladies and gentlemen. First of all, let me send my salutations to Dr. Aziz S.A. Kadia, Chairman of Convex Hub and the organizer Convex Hub. And very good afternoon to the Chairwoman of today, Professor Dr. Fatima, the fellow speakers, Mr. Premadasa, and my long-term friend, Mr. Salvatore. Ladies and gentlemen, I'm Da Wong from Singapore, and today I'm going to give a very quick outlook from the technical and financial perspective at the enterprises covering 2020 to 2021. Next slide, please. Well, this is my 10th consecutive year speaking in the Global Rubber Conference starting from 2011. And I remember for last 8 years from 2011 to 2018, every year I have called for the rubber prices to be dropping. And I knew that sometimes, I have caused a lot of irritations and made a lot of people not happy. But last year, 2019, I remember in the GRC, I actually did mention that this could be the final bottom of rubber prices in the whole decade, and there could be a V recovery moving to 2020. I'm still very clear that I made such a forecast. And today, all right, in the GRC 2020, I would also continue to stake my name on it that there is possibly another V recovery, and we are actually looking at rubber prices gradually on the moving up, especially sometime next year, 2021. Next, please. So today, my topic will cover largely on four subtopics. Number one is on the market fundamentals on US dollar, all right, in short, we call dollar versus rubber. Then the current macro factors in the world. And what are the challenges that we could be facing in 2021? And last but not least, as usual, I will show you the chart and what we are looking at the NR prices in coming 2021. Next, please. Well, if you look at this chart itself, right, the green chart at the top is actually US dollar index, and the red bar chart at the bottom is actually the NR prices. And this chart actually covered from early 2000s till now. It's almost like close to 20 years. If you look very closely, rubber prices they have been moving inversely to the dollar index, which means whenever we saw in the past a dollar devaluation, okay, rubber prices will tend to spike up and vice versa. So if you look at my chart here, all right, I don't think I have a cursor, but if you look at the green arrow at the top, all right, that one is somewhere from the year 2008 to 2011. Well, when dollar index actually traded on a almost historical low over the last 30 years, that's when we saw the rubber prices went up, and eventually sometime in March to May 2011, the rubber prices hit the top of $5.70 per kg while trading in the SICOM exchange. And what I want to state a very interesting fact that we discovered, all right, during those 2 years, very quickly from 2009 to 2011, when rubber prices climb up to the historical high at $5.70 US dollar per kg, that's number one. That's the time when dollar actually devalued to almost a historical low. Well, and number two, we also realized during that dollar devaluation period over 2 years, we had seen the QE1, QE2, and QE3. So we actually discovered that there's a very interesting fact here. Whenever the US Federal Reserve implemented a stimulus package, all right, I'm talking about a stimulus package. It's not about just putting the dollar value down. It could be cutting interest rate, printing monies, that kind of thing. So a potential stimulus that is going to be rolled out by the Federal Reserve of the USA will effectively push rubber prices higher. This is our discovery, which the same thing happened over the last 2 months, all right, before the US election. There was actually a big fight between the Democrats and Republicans talking about rolling out another 2.2 trillion US dollars worth of stimulus to fight against the coronavirus economic slowdown. And although the stimulus wasn't rolled out at the end, but we have seen a potential dollar devaluation and the rubber prices shooting up, which I think everybody had witnessed that. Next, please. Okay, what we are currently looking at this year, 2020, what that we call the current macro factors, all right, over the world. Number one, of course, we have seen the unexpected outbreak of the COVID-19, or we call the coronavirus. And currently in the Europe and America, we are looking at a second wave, or we call resurgence, all right, which are pretty drastic and detrimental to the economic growth in Euro-M region. And of course, the dollar outcome in post-US election is also another very important topic, because everybody has been asking me, what will happen after the new president comes on board in USA, of course, and what will happen to the dollar? And my answer is, regardless Trump or Biden becomes a president, we would foresee that from our research and from the cycle of the dollar trend, most likely dollar is going to devalue in year 2021, which is a few months from now. And potentially, we are looking at a drop of the US dollar. And if this comes together with some rollout of new stimulus, which we foresee will be the second quarter of 2021, effectively, that could actually push rubber prices higher. All right. Of course, that is still our consensus. And thirdly, we are talking about US military dispute may spike dollar. And every time when the US wants to increase the dollar value or to inflate the dollar, all right, we also notice that US would execute some military exercise or military actions, especially in places like Middle East or in Latin America. And that's the time when you see the dollar will spike and commodity prices will drop. So these are all the mixed factors that we have gathered over the last couple of years. Next, please. Click on it, please. Right. So what are we looking, okay, and expecting in year 2021? Yes, a global recession. Definitely we are looking at recession, all right? There's no reason that we are looking at a fast recovery and things will go back to normal. And we always believe and forecast that things will not be the same again, even after the post-COVID, all right? And this year alone, in year 2020, we have seen a global downfall in many industries that include the tourism, airlines, and the huge retail stores, car rentals, hospitality like hotels, all right, Airbnbs, shipping freight, and all the big F&B brands. They are all been hit and affected. So next year will be a tougher year than this year, but it may not necessarily affect the rubber prices, and which we will cover on the third and the fourth topic. And of course, we are looking at the global debt on the rise, all right? The reason is because of a huge printing of money in order to roll out the stimulus to support on the slowdown of economic crisis, such as in Europe, which a lot of money has been printed out by the European Central Bank, and in the Federal Reserve of USA. So the last macro factors that we also notice that could be a good catalyst to push up the rubber prices is a rapid rise in the global demand for latex, which is a rubber glove, as well as the nitrile gloves. Of course, we know that nitrile gloves is totally free from latex and it doesn't contain any rubber. But then we also know that the nitrile gloves has been on a rapid rise over the last 6 to 9 months. And because of the prices keep going up, that could actually cause a correlation to rubber gloves on the rise as well. And effectively speaking, or indirectly, it actually helped rubber prices. Next, please. Okay, now let us take a look at the challenges. What are we going to face in 2021 that could effectively affect the rubber prices? Number one, regardless Biden or Trump, all right, the US-China trade war will continue. This is something we are very sure because China is growing so rapidly and so fast. And this year alone, due to the pandemic outbreak over the whole world. But China is the only country that could be sustaining a positive GDP, right? And on the other hand, when we look at US economy has been shrinking very badly, all right? So the trade war, we do not foresee that it will become better. And just take a quick look at some numbers that I want to quote here, all right? Based on the Q2 season, which is the second quarter from April to June, all right, China GDP was up 3.2%, which there was a reduction. But in Q3, it actually gained 4.9%, which is a better. But if you look at US Q2 GDP was down 31.4. Yes, and that is a minus 31.4%. And in Q3, there was a recovery of 33.1%. But the Q3 GDP simply equates the negativity in Q2. So on the overall this year in US, we do not foresee there's a huge gain or there could be a very small or negative gain in the GDP. And looking at the Eurozone, which covers the 19 country, all right, the GDP for Q2 is minus 14.7%, okay, minus 14.7. And Q3, there was a gain of 12.7, which means the Q3 positive gain was still not able to cover the negative growth in the Q2. So on the overall, we are looking at the global recession in 2021, as you mentioned earlier. Next, please. Click. Yep. And we also foresee that as quickly as in the first quarter of 2021, there could be a crash in the crude oil prices again. All right, there could be a crash again because of the rapid demand fall in the WTI. Economic standstill after the pandemic crisis, all right, in the post-crisis is definitely also what we are looking at. As I mentioned earlier, even after the crisis is over, do not expect everything to go back to normal or everything will go back to what we used to have. Things will be slow and a lot of things need to be rebuilt. And that is a time that we are going to face a lot of economic challenge. And coming to the next one, of course, the warfare to stimulate U.S. economy. We mentioned earlier, whenever U.S. Wants to inflate the dollar for quick recovery, there could be a warfare somewhere, especially in the Middle East or in the Latin or in the Central Asia area. And dollar may move into negative interest rates. So you see, on the overall trend, we are looking at dollar may devalue progressively in 2021. But every time when dollar falls too fast, and the US government could actually instigate a mini warfare in order to inflate the US dollar to normalize it. But the overall trend, we are still looking at dollar trend falling. And how bad would that be? We do not discount, all right, but of course it's a forecast. We do not discount the possibility that US dollar may even go into a negative interest rates, which is for the first time in history. And when would that be? All right. We foresee it could be anywhere end of next year, 2021 to 2022, especially when the huge market correction will come in the second half of next year, 2021. Please click. Next, please. All right. So now come back to a summary at how we look at rubber prices. All right. Rubber prices is likely to fall again in the first half of 2021, but then making a V recovery. All right. Last year, we did mention that that could be the final bottom in rubber prices, and we're going to see a steep V recovery with a bottom of about $1 per kg. And after it has gone up to about $1.70, all right, last month, which is, it makes a lot of people happy, especially the smallholder. And now it is going back down and traveling sideways. We foresee there could be a drop again, all right, which we will tell you where do we expect the bottom to be. And when the V recovery comes up again, we believe in the second half of 2021 or even 2022, that's when the rubber prices will go into a genuine recovery, which will go back to probably like 9 years ago. So what are we going to look out? Most importantly, as we covered on the first slide, all right, every time when dollar devalue, okay, that is the first catalyst to push up commodity prices, including rubber. And the second catalyst is look out very closely to US stimulus, all right? Every time when there's a US stimulus, there is a very big possibility that rubber prices will just jump up, which just now I have covered on the past event. So looking forward, after January, when the new US president takes over the office, all right, regardless who, honestly, I don't care who, but whoever the new president comes in, this new president has to quickly, all right, draw up a new budget to roll out a stimulus in order to help US, okay, fight the economic slowdown. And we believe it will be sometime in February or March. That's the time when we foresee there could be another V recovery. All right. So next, please. Let's come to the last slide. All right. I'll make it very short and sharp. This is a very interesting chart. It's a week chart that we derive from SciComm. All right. SciComm is a chart over the last 3 years. All right. I'm not going to show you on the last 10 to 20 years because it's too far away. Just based on the last 3 years, what we have seen is the highest prices of natural rubber prices trading in SciComm went up to $2.40 in February 17, which I clearly remember 3 months before that, or 2 months before this high was formed. That was in December 2016. I also delivered a paper in Cambodia, in Siem Reap, all right, for the Cambodia rubber bodies. And I correctly predicted the high will be anywhere $2.40 to $2.50. And after that, it started to roll down. So when we look at this chart, all right, just from the high $2.45 in February 2017 until the latest prices on the right-hand side, all right, if you follow the cursor and go to the right-hand side, all right, this chart was extracted only sometime last week, all right, it's a weekly chart, so it is still considered a very updated chart. Well, we have seen that the recent high is about $1.70 US dollars per kg, all right, and the first thing that we take note is that the rubber prices have traded above the EMA 200 line. Can the tech man actually put the cursor on the EMA 200, which is the purple line? Okay, I want to explain. EMA stands for exponential moving average, all right? This is an exponential moving average line of the last 200 days. And this is very, very important indicator. Why? If you look at the high in June 2019, all right, which the high went up to $1.68, okay, on the right-hand side. And the high, which was $1.53, which was done in June 2020. All these two highs actually hit the EMA 200 line, got resisted, and fell. All right. But if you look at the latest prices on the right-hand side, yes, the prices have conquered and climbed above the EMA 200. So that gave us a very good confidence that rubber prices have actually started to climb up in the mid to long term. But it is not immediate. All right. It's going to go up slowly and progressively. And that's what we call slowly but surely. I think that's a good news. Okay, so what we are looking here at $1.70 per kg is there could be, in fact, very potentially going to be followed by a correction soon, which now we have seen it very rapidly from 170. It went down to about 140, okay, $1.40 US dollar per kg, all right, last week. And now what are we expecting? From now, all right, until January, which about 2 months from now, or even I call it 2 to 3 months, okay, we are expecting the natural rubber prices to move sideways, all right, sideways anywhere, as I mentioned in the commentary, sideways from $1.30 to $1.70, all right, with no clear direction where it is going. It could be reaching the bottom, reaching the top, ding dong, ding dong. And only when the market will break out of $1.70 and start to climb up, which is, I want to go back to my earlier points that I mentioned that only when we see the next US stimulus, okay, rolling out sometime probably February or March or April, and together with the next US dollar trend, US dollar value coming down, and most likely we're going to see rubber prices breaking above $1.70, okay, per kg, and subsequently in the middle next year, we are expecting the market to go back up and hit a double top at $2.40, which was the high in February 2017. So this is a very short and straightforward forecast over the next 6 months. But I know that a lot of people, every and GRC, they would love this session because it has been quite accurate for the last 10 years, and we are pretty proud of that. But if you want to know where the rubber prices will be going beyond June, one thing I suggest is continue to stay tuned with Complex Hub and stay tuned with our other events, and we will continue to update you on the potential prices in the post-event after June next year. All right, next please. Oh, that is the last slide. So my question is, are you ready, all right, for the next, as I mentioned again, a summary in the sideways trend over the next 2 to 3 months, and followed by a potential rubber prices ascension, all right, probably after March next year. So for those people who are going to go long or going to go short, okay, based on this forecast, I think it's very effective for you to devise and pick up your hedging strategies in order to maximize your profit and control your risk and limit your loss. Thank you very much, and I shall pass the mic back to Prof. Dr. Fatima. Thank you.
Thank you, Wong, for a very exciting trip into the futures market and of course your projection. Basically, what Dawong did was, this is what we call technical approach, yeah, where you look at the past behavior, the correlational relationship between prices and the US dollar. Every time it devaluated, the price of rubber increases. So good correlation there, and probably some causality. Maybe you have some
Thank
sense,
you.
some good sense there. Right, I cannot comment because this is not my area. But after listening to Dawong, he made some senses. Yeah.
Thank you.
And I like his optimistic view. The fact that the rubber price might recover in the mid-year next year, largely due to improvement, not to say progress, but changes in America, as well as a good recovery from China. So these two factors might drive rubber prices to be recovered under the current low. Right. So we have three speakers, guys, from the fundamental factors, production and consumption, and therefore the market situation. From our Prima Dasa, and then Salvatore has listed us the challenges and the prospect. So it's good already, despite the gloom picture from the macro perspective, supply side and demand side. Salvatore has zoomed in into the regional production pattern and looking at some prospect from our consumption sector, particularly from region China, as well as the business sectors, tires and non-tires and GRG, and the possibility of the challenges from climate change and digitalization and so on. And of course, Dawong gives you hope there is a good prospect for you to take long or short position in the futures market, provided that you understand the market very well, right? And also provided you are willing to take risks in the futures market. Right. So I think now is the question Q&A session. Oh.
5 minutes from your side.
Okay. So there's no question there. All right. So what do I do? So give me more.
Yeah, your own opinion.
Yeah. Okay. All right. Okay. I would like to give my insight into this matter. Right. I would like to re-emphasize that before COVID, right, talking about production sector, there are structural deficiencies. There are structural problems. Okay, and Prima Dasa and Salvatore have listed down the problems. Dependency on foreign labor, be it in Malaysia or Thailand or even Sri Lanka, we depend on foreign labor. And we know very well one day they might go, and the time has come, right? We know very well that, as Salvatore said, the return is very low compared to the other players. And over time, the real income or the real prices are very low, whereas the other players are, doing well, except now. And as a result, there is very, very little capital formation at the farms, and therefore yield is low, 1.7 as mentioned by Prima Dasa. And what I'm trying to say is, COVID has accentuated the problems that we have had before it happened, right? And it opened up really the structural problems that are facing the rubber industry.
There's one question anyhow.
Oh, okay. Sorry. Yeah, okay. So we have one question here. There is a difference between end of oversupply in natural rubber between ANRPC and IRSG. What can we say about natural rubber prices in the mid-decade of 2024 to 2027, considering global growth? So I would like to pose this question to Salvatore then. You want me to read again? There is a difference between end of oversupply in natural rubber between the estimation by ANRPC as well as IRSG. So what can we say about natural rubber prices in mid-decade of 2024 until 27, considering or taking into account global growth? Anyone?
You should ask that. I mean, certainly, if the situation, I think long term, also ISG is looking to a deficit, likely deficit situation in the market. It was well explained by Premadas as well, in the sense, no, we are not seeing much new planting coming in, and these, of course, over the years will tend to reduce or maintain, let's say, but not increase the natural rubber production as it is, as we hope that the demand will come up strongly. So I think if that is the situation of a deficit, price might go higher. No, but I think commodities are always cyclical in terms of price dynamics. So we are going always to have ups and downs according to to different market conditions. What as a sector or players of this sector we should look at is just to correct the things that we should correct to maintain the profitability along all the value chain reasonable. And these apply also to smallholders, but to all the other players. Now we need to have a profitability that is more stable and not with such big disparities along the value chain. And to me, there is only one way to do this: is working together. So there is no one that has a magic wand that can solve these issues. So producers, consumers, NGOs, whatever, we have to work together and try to find out, to put this market in the right track.
Thank you, Salvatore. What about you, Mr. Premadasa? You mentioned about untapped potential, particularly in terms of yield improvement, right? And then to increase replanting so that mature trees, have a bigger share. At the moment, the over-mature is still a big chunk of the trees. So what's your take here?
Yeah, Professor Fatima, yes, that question is more relevant this time. My paper focuses on the production capacity. It is measured in terms of the mature area. Yeah, the trees to be opened for tapping until 27 are already on the ground. They are already planted. So all the planting data we gathered from our member governments, our member governments is covered nearly 95% of the total world rubber production. So the other thing is all the expert in the statistics pertaining to the rubber growing countries, they met in each year in here or in other countries, in the rubber producing countries, and we calculate and we forecasted our future planting mature area and other statistical aspects in very clearly in each year getting together. So the thing is now, according to our forecasting, as I explained, substantial increase in production capacity can be seen after 2032. It means it is happening, depend on the planting rating from 2021 onwards. But before that, it means in between 2020 and 2016, there are so many areas planted, replanted, and new planted, but it is marginal rate. So it means in future, after the 2023, the mature area is increasing marginal growth. It means the production capacity can't increase so large level. After the 2025, it is stagnate. So it means the supply when the supply is stagnated, and the other part is the consumption is growing in the marginal rate, normal rate, there may be a what is that, the deficit in the market, natural rubber in the market. So it means some rubber price will go up after the 2024. as clearly mentioned in the Mr. Dow in the after the 2021, the price sometimes a little bit increase, beginning of the V shape. Yeah, that is my opinion.
Wow. You think it's going to be B, yeah?
Yeah.
All right, Mr. Dawang, what's your take in this case?
First one.
Yeah. 2024 to 2027. What are the prices?
I think I yeah thank you, Prof. I think that is a very challenging question because looking forward at 1 year prices or 2 year prices, I think we are trying very hard and still can do it. But looking forward to the prices, which is like 5 to 7 years from now, I think only God can do that.
Okay.
Okay, yeah, but let me quickly just give my just a quick outlook. Of course, we still want to put a disclaimer on this. All right, all commodity prices in the world move in a boom bust cycle, or we call a cycle. There are times when it hit the high, there are times it hit the low. All right, but if you ask me about rubber prices, I believe every time when the prices move up to the next cycle high, the prices will always be higher than the previous high. So it is like stepping up, but it will take a long time for the cycle to form, top and bottom, top and bottom. So coming back to where I did a forecast earlier, all right, if next year the rubber prices start to recover, okay, of course it will go up like a waveform. Eventually, I believe it will hit the high sometime in 2022 to 2023, or even early 2024, which I believe the high of that time will definitely be higher than what we saw in 2011. So if you ask me, beyond that, 24, 2025, 26, or 27, what will happen? My strong take is that after the top, which is 2023 and 2024, most likely we're going to see the cycle from the top slowly falling down again. But it's not going to be a sharp fall or plunge, definitely. So it's like, again, the cycle hit the top and start to come down. So in summary, the NR prices from 2024 onwards to 2027, personally, I feel that it is on a gradual down move again, like what we have seen previously from 2021 to 2011 to 2016. So it's just a cycle. And then again, I feel that everybody, regardless you're a physical player or you're a speculator or you're a hedger, you should be prepared and understand the full macroeconomics and the cycle of commodity prices, including rubber. Thank you.
Right, thank you. If you look at the what we call the demand supply determinants of prices, they are multidimensional, right? From the supply side, the land area, the prices, the labor situation, the substitute, China factor, what else? The US politics. I'm just wondering which among these variables are, is the most significant that you refer to, Mr. Dawong? Of course, you have chosen American politics.
Yes. I still personally, I still believe politics, geopolitical factors, US dollar trend, these are the three main important things. Of course, I am not denying that supply demand, the world production. Of course, that is very important. But let me state a very quick example. After the post-crisis of 2008 subprime crisis in the world, from 2009 to 2011, actually there wasn't much growth. Okay, there wasn't much growth, but the dollar devalued heavily and stimulus kept rolling out. So my question is, why would the economy at that time was so shabby and rubber prices kept surging? So I hope that will answer the doubts of some people, which I have always put this example. So at the end of the day, supply, demand, global production, yes, is very important. But I still believe that as long as US dollar controls the global economy and the economic structure, it does play a very important part. You see, just like, for example, in 2008 onwards, rubber prices were supposed to recover just because the US president started to call for the trade war against China. Rubber prices has been down from 2018 until recently. And nobody could help them. Every day it went lower until everybody got so disillusioned. So that's my personal opinion. Thank you, Prof.
I think from economic perspective, we call it, of course, the fundamental factors are the supply and demand, as usual.
Yes.
And the rest are technical factors. These are the factors mentioned by Da Wong. Our expectation of the American economy, the geopolitical condition, and so on. Can I just digress a bit? Da Wong mentioned that we will not go back to the normal or business as usual scenario. I would like to know what you mean by that. I mean, we will not go back to the so-called normal situation. So we will have new norms.
Yeah.
Can I
Yes.
what do you mean by new norms now? Are you talking about
Okay.
SOP or what?
All right. When we talk about new norms, okay, I just did a few very classic example. Okay, after the post-COVID, I believe a lot of manufacturing plant will transform and switch more into automations than using human labor. All right, which now a lot of people are already under transformation. So
Okay.
human labor will cut down because if your factory used to have 500 people, okay, working on one shift, now definitely you have to cut down. So the number of labor working will be on alternate or we call staggered shift.
No problem. Yeah. Okay.
Yes.
Good.
So Industry 4.0 will come in very effectively to take
Okay.
over a lot of manufacturing industries. Then, of
Okay.
course, on the other hand, if you talk about tourism, you talk about cross-border traveling, I think it will not be as easy as what we used to just pick up a passport, get a visa, and travel. You
All
know?
right.
So safety will become a very dear concern to a lot of countries.
Yeah. So, Basuri, do you have some points? Why is that? we will not go back to the
Yes,
normal?
first I would like to disagree with Dar about the importance of supply and demand. I think supply and demand is still important, and actually on that side we have to have a bit more transparency because it's not only supply and demand, supply in terms of production, but is also a big role is covered also by stocks. Now, when we speak about supply and demand and we speak about deficit, in that dynamics we don't consider the stocks that instead are there and in some years are very relevant and they play a role in the price dynamics. Because if I have a lot of stocks available somewhere, although the supply and demand saying that that we are in deficit, still we might not have higher prices. So I think that is something that we have to consider, and of course the geopolitics play a role, but I would not say is the major role. On the new norm, I think the COVID-19 has accelerated certain things that were already happening before. So if you look, for instance, at the tire sector, now you can see a lot happening right now in terms of disinvesting not core business. There is a lot of merger and acquisition. That was something maybe planned already, but now this COVID-19 has greatly accelerated these things. Also, we need to understand what will be left about manufacturing activities in Europe, for instance, or in USA after this crisis. Because right now, governments are trying to keep employment levels and activities up and running, but they are giving a lot, or they are providing a lot of funds and incentives to do so, increasing debts. And at the end of the day, one day this will stop, and we have to see what will happen in the manufacturing sector after that, because it's possible that we are going to see a lot of companies actually leaving the market because they are not able to stay there, and unemployment going up. So I think the consequences might be serious from economically and socially. And in some part of the world, we are already seeing it.
Yeah. Thank you, Salvatore. Just a few words from you, Pramadasa. Anything? So-called new norms.
Yes, the thing is now, as I explained by my presentation, substantial increase in the production capacity can be seen after the 2030 because of the planting rate after the 2025. It's depend on the planting rate. The best policy action, definitely we have to maintain the global supply at the level of the matching with the global demand. Otherwise, there may be a problem. This can be achieved by formulating the planting policies by giving due consideration to the global terms of the global demand. If without looking at the global demand, if we are going to plant a low rubber, it is a very large amount of the rubber in the field, it means again we will have face a surplus of the market. So such a balanced demand supply in the global market can directly contribute to the long-term stability of the prices at the economical sustainable level. This is my main point. The other one is all of we are aware that we know about the rubber prices fluctuation and in the past how to fluctuate it and the price scenarios in the future. But I think now we have to change our mindset and have to look at the other dimensions, such as how to increase the productivity, how to decrease the cost of production, the alternative uses of the natural rubber, new innovation in the downstream sector. These are the most important factors we have to consider. If we look at the productivity and cost of production, based on these factors, we have to create another policy matters and the policy decisions to balance the supply and demand. This is my point.
Ladies and gentlemen, I think Mr. Jawang, Salvatore, and Primadasa has concluded our session very well. Of course, the future is gloom, but as mentioned by Primadasa, Salvatore, and Jawang, if you make effort to rectify the structural problems that we are having, if you look for opportunities, if we invest in production capacities, innovation, digitalization, and green economy, hope is there. Thank you.
Thank you so much.
Thank you very much once
Thank you very
again to
much.
all our session one speakers. And of course, thank you very much to Professor Fatima Arshad for chairing this session. And now, without further ado, we shall now cross over back to Bangkok, Thailand with my counterpart, Tong Mei. We shall see what's going on over there at this moment in time. Tong Mei, hopefully we can cross over back to Thailand and to see the progress or the development at the venue. And yes, there you go.
Present about IEAT and also your highlight products or highlight projects, please.
Thank you. Welcome all of you to Rubber City Thailand project. This project is developed by Industrial Estate Authority of Thailand, or IEAT. First of all, I will explain a bit more about our organization. IEAT has major role to create, operate, and manage industrial estates and industrial port. Currently, we have 61 industrial estates across the country in 17 provinces and 12 industrial ports in Maptaput area. Due to today, the total investment in industrial estates around 132 billion US dollar. We have the industrial area across the country around 70,000 acres. We create 500,000 jobs, and there are 5,000 factories that locate in our industrial estates today. Moreover, for Rubber City Thailand project, this project is developed by Industrial Estate Authority of Thailand, specifically for rubber industry, for midstream and downstream rubber-related industry. This one is specially designed according to our concept of eco-industrial town, which developed from our experience, almost 50 years of developing, manage, and operate industrial estates across the country. This one we designed to support rubber industry. That's why we pay a lot of attention on our water supply. We provided reservoir that can provide water around 3.4 million cubic meters for industry that located in this industrial estate. Moreover, this one, we select the area that might answer your needs the best because it's close to Hat Yai Airport and it's not very far from our border to Malaysia. It's only 66 kilometers away. Why you have to choose these industrial estates or rubber city, Thailand? Because we provide market and supply while gaining mutual benefits. We get fully support from government agencies. We provide our service. We call Total Solution Center, which will give you consultation and advice related to establish your factories in industrial estate. And moreover, IEAT as government agencies, we can provide you approval and permissions that needed related to set up your factory. If you decided to locate your factory within our Rubber City, Thailand today, we have special promotion for you. You can buy or lease the land within industrial estates. This promotion stays until June 30, 2021. For land, we discounted 5%. And for lease promotion, you can have a free land lease charge for 1 year. In case you need a bit closer to border for industrial estate or industrial area, we are developing the latest one. This one will open on January next year. We call it Songkhla Industrial Estate. This one only 1 kilometer away from Malaysia border. And for more information, if you want to know more about us or want to have more information about our industrial estates and networks within our organization, please contact us at worldwideweb.ieat.go.th or you can scan this QR code to access our website. Thank you.
All right, that sounds interesting. Thank you very much, Mr. Napong, for your information. For those who are interested in the IEAT or the project, don't forget to scan QR code or as Kun Napong mentioned earlier. All right, and I would like to take you to around the next booth here near IEAT. This is Rubber Authority of Thailand, and there are many products here. I will start with the first one here in the management of a patient in cardiac arrest. It is sometimes the least experiences provider given chest compressions, intubation, the patient and running the code during the most crucial moment in that patient life. So the specification is foaming latex rubber consumption 3.8 kilograms of dry rubber per piece. This is the first one. And another one I would like to introduce you. The second one, the natural latex foam pillow made from 100% natural latex according to the structure with small porous features. As honeycomb, help the pillow have good ventilation, reduce dampness, while softness property. The natural latex foam pillow is strong enough to support the weight of head. This allows the neck maintain proper alignment with back and help increase blood flow into the brain. Specification: size of latex foam pillow, wide 37 centimeter, length 58 centimeter, and thickness 12 centimeter, with the natural rubber consumption 2 kilogram of 60% concentrated latex, 1.3 kilogram of dry rubber. All right, and the next one. The next one is harmony of piles and swollen vein in anus and lower rectums. They may result from staining during bowel movement or from increased pressure on this vein during pregnancy, according to the structure with small pilous features. As honeycomb reinforces the seed cushion product have good ventilation and reduce dampness, while softness property. The natural latex foam seat cushion is suitable for those who need to sit. Moreover, the latex foam seat cushion for harmonic patients have been designed as a donut hole in the middle of cushion for decreasing painful. Natural rubber consumption 2 kilogram of 60% concentrated latex, 1.2 kilogram of dry rubber. And the next one. NR modified water tank liner is liner made from cotton fabric coated with compound latex using friction calendaring technique. The advantage performance, long service durability, tear resistant, safe and easy to use for cording inside storage water tank. Composition 60% concentrated latex, food grade chemical dispersion, cotton fabric, and NR consumption, NR 300 to 400 square meter of liner area water tank. 1,000 cubic meter used tank liner, 600 square meter consumed dry rubber, 240 kilograms. All right, and the last one that I would like to recommend you. Wow, that's so cute. The state bowl are small bowls that are held in the palm of your hand. The act of repeatedly squeezing the bowl releases tension and helps to relieve stress according to special properties of natural rubber as flexible and elasticity. Natural latex foam have been adapted for producing latex foam stage ball. How to use? Just squeeze the ball with fingers and thumb. Squeeze and release with natural rubber consumption 20 grams of dry rubber per piece. Wow, that's so cute, and you can use it like this. Alright, so if you feel stained or feel not good, you can squeeze it. Alright, ladies and gentlemen, and now time's up, so I would like to take you to allow the next time again.
Thank you very much, Tung Mei, for the very exciting booth tour. To all our viewers out there, if you missed some parts of this conference proceedings, you can, of course, log in again and watch it on demand. All the presentation slides will be available for download from the official website. Convex Hub often hosts various interesting live forums via our Expert Insight at Live series. Please subscribe to Convex Hub YouTube channel, switch on the notification and get notified on our upcoming Expert Insight at Live on-demand videos. And also do follow us on our LinkedIn page, FB page, and Twitter for more interesting upcoming forums and conferences. We will have a short break before we are going to proceed later on with session 2 on navigating socioeconomic disruptions, to be chaired by Mr. Pong Kai Si, immediate past president, Plastic and Rubber Institute, Malaysia. Once again, please log out from this link and join us in another virtual conference room. See you all there.